All right, today we're taking an investor's look at Advanced Systems Automation, or ASA. They just released their financial report for the first half of 2025, and we're going to dig into it, cut through all the corporate jargon, and really figure out what the numbers are telling us about the health of this company.
So, who exactly is ASA? Well, they're a technology and manufacturing company that, as you can probably guess, has just hit a pretty serious rough patch. Our goal here is to go beyond the press release and piece together the real story of their last 6 months, one number at a time.
As soon as you open their financial statement, there is one number that just jumps right off the page. It's a headline figure that honestly sets a pretty dramatic tone for everything else we're about to uncover.
Get this. In the first half of 2025, the group's net loss more than doubled. It absolutely ballooned from about $500,000 Singapore dollars to over 1.1 million, a jump of over 100%. I mean, that's not just a bad half year. That is a serious, serious red flag for any investor looking at this.
And that right there is the key question, isn't it? A loss is one thing, but a loss that's accelerating this fast, that forces us to look a lot closer. We really need to get behind that scary headline number and figure out what's actually going wrong inside the business.
Okay, so to get to the bottom of this, we're going to start with the profit and loss statement. This is where we see the nuts and bolts of their day-to-day operations. And what we find is a classic, painful story of squeezed profit margins. Now check this out, because the relationship between these numbers is what's really telling. Take a look at the top line, revenue. It only dipped by 2%. You might look at that and think, hey, that's not so bad. But then your eyes go down to gross profit, and that fell by a whopping 11%. So here's the kicker. Even though they were selling almost as much stuff, they were making way less money on every single sale. So what's causing this squeeze? Well, it turns out it's basically a perfect storm. First, demand dropped in one of their key areas. At the exact same time, their costs went up, which shrunk their profit margin. And then you just layer on top of that higher admin costs from a new acquisition and a $200,000 loss just from foreign exchange rates. It's a classic case of getting hit from all sides at once. For an investor, the takeaway is clear. The company's core business is just getting less and less profitable. A tough 6 months is one thing, but when you turn the page to the company's balance sheet, whoa, it reveals a much deeper, more fundamental problem, one that points to some really serious financial pressure. 17.7 million Singapore dollars. Now that's not profit, that's the company's net current liabilities. It's a huge figure, and it points to a potential cash flow crisis that goes way beyond just one bad quarter.
So what does that actually mean in simple terms? Well, think of it this way. Net current liabilities means that ASA owes more money that has to be paid back in the next year than it has in cash or things it can quickly turn into cash. That can make it incredibly difficult to pay your bills, your suppliers, and your debts on time. And yet, despite this $17.7 million hole in their short-term finances, the board says they're confident. They've prepared the accounts on a going concern basis, which is basically them officially saying they assume the business isn't going bankrupt anytime soon. So you've got this huge disconnect, this tension, between the massive red flag on the balance sheet and the board's official confidence. As an investor, that should set off some major alarm bells about the company's solvency. As if all that financial pressure wasn't enough, there's another major layer of risk that we need to talk about. And these are the really scary kind, the big legal challenges that aren't even fully accounted for on the balance sheet just yet. This is where you find what they call contingent liabilities, basically giant potential costs that might hit them in the future, and they are huge. First, there's a nearly $10 million claim from another company, then a $300,000 claim from a former CEO. But here's the wild twist. ASA has filed its own police report against that same CEO for allegedly taking over $1 million. This isn't just a financial problem anymore, it's a full-blown legal minefield.
So what does this all mean? Well, ASL says it's fighting these claims tooth and nail, but the potential financial hit is just massive, and the outcome is a complete unknown. For an investor, the big takeaway here is that these off-the-books risks create this giant cloud of uncertainty that makes it incredibly difficult to figure out what the company is actually worth. Okay, so with squeezed profits, a scary balance sheet, and a ton of legal drama, what on earth does the future hold? Well, the company's own commentary gives us a pretty clear and, frankly, a very cautious picture. Look, ASA isn't trying to sugarcoat things here. They're openly acknowledging that they are vulnerable to all the big economic headwinds that we're all seeing right now. They're basically telling us, hey, the road ahead is going to be really tough. So what's the game plan?
According to their report, they're taking a long, hard look at every single part of the business. But the really crucial phrase here is downsizing or divesting. That's corporate speak for we might have to shrink the company or sell off pieces of it just to survive. That's how serious this is.
And all of that leaves us with the final critical question. ASA is staring down a perfect storm. You've got poor operational performance, a really precarious balance sheet, and massive legal uncertainties. They have a plan to try and fix the operational side, sure, but the big unknown, the billion-dollar question, is whether those fixes will be anywhere near enough to overcome the immense financial and legal pressures that are closing in on them from all sides. That, right there, is the core dilemma for advanced systems automation today.